Hello everyone. Thanks all for understanding on Monday and Tuesday. Earlier at that time of my post note on Tuesday morning, I didn't realize that Wednesday was on holiday. That's why I said I will upload the pre-market video on Wednesday. So thank you all very much for the support. So without delay, let's get into today's video. First of all, as most of us know, last night was US Fed Chairman's press conference, and as everyone expected, they kept the interest rate unchanged. Before discussing about it in details, just a bit of background. We know US March month inflation was very high. In addition to that, last Friday, PC inflation for March month also comes as very high than the February month, also higher than what analyst was expected. So the general overall fear among investors last night was whether now will the Fed start to increase the interest rate again or not. I mean, all the rate cut related excitement and expectation all were long gone. That's the overall sentiment. Now, coming to the Fed Chairman's press conference, the important question is whether Fed will start to increase the interest rate or not. For that, Fed Chairman straight away said no, that unlikely there will be no further increase of interest rate from the present level. In response, press asked the Fed Chairman whether this pausing interest rate will be sufficient to bring the inflation down. For that also, he said he believes it's sufficient, and last night released macro number of available jobs opening data was clearly evident kind of. Regarding that, Labor Department released the data. The number of jobs that was not filled or available at the end of last working day in March. The data came as around 8.5 million openings. It was the lowest value in the last 36 months. So Fed Chairman cited this labor market is softening, so pausing the interest rate is the correct thing to do. Then the next question, what is causing this interest rate to increase and when he think he will start to reduce the interest rate? For that, he said, since December, goods and housing inflation had been consistently higher, which is what causing this persistent inflation. Regarding the interest rate cut, he said, incoming low inflation data will be the heart of that interest rate cut decision. Meaning, only if the inflation data falls, then only he will look for interest rate cut kind of. After that, there were two very completely unexpected dovish comments. One regarding the future policy direction, two is about the balance sheet. Regarding future policy direction, Fed Chairman mentioned that he and FOMC members are going to follow the dual mandate, meaning balancing the inflation and labor market. I mean, he said this as well. Compared to last year inflation, now it was down to below 3%. So he thinks it's time now Fed has to balance between the unemployment and inflation. Then about the balance sheet, at present Fed is offloading about 60 billion US dollars worth of treasury securities, which they quantitatively eased during 2020 period. That from June month onwards, they are going to reduce that to just 25 billion US dollars. In simple words, Fed is going to reduce the pace at which they are quantitative tightening. So, overall summary, this Fed balance sheet, dual mandate future policy and no more interest rate hikes, those were three positives. But on the negative side, for Fed to cut the interest rate, either inflation has to drop or the labor market has to become worse than now. Those were the takeaways. Regarding the market reaction, when the press conference started, due to all those dovish comments, S&P 500 increased over 1%, Dow Jones increased over 500 points, and throughout press conference, US market traded higher. But the moment press conference was over, profit booking started and all three US major index dropped to the more or less exactly at the same place where it was before the press conference. In the end, Dow Jones alone increased 0.23%, S&P 500 down by 0.34% and Nasdaq also down by 0.33%. In case of VIX, it dropped by 1.6% and moved down to 15.4. In line with that, GIFT Nifty also exhibited the similar behavior. It increased all the way up to 22,750, but early morning today it closed at 22,675. Equating it with the spot market, for now it's indicating the gap down of 50 points. Regarding Indian ADR, as it is, last night only Wipro closed negative, all others closed on a positive note. Especially HDFC Bank increased to near 1%. I mean, even if we calculate the 1 month arbitrage, then also HDFC Bank got 1% positive in it. All others either flat to negative. And this FOMC meeting did crash the oil price also to over 3%. At the time of this video, Brent crude oil trading around $83 per barrel and WTI crude closed at $79 per barrel. So those were the things happened yesterday in the dollar market. Now let's look at the India specific new information. First, about the auto sector. If required, please pause and have a look. Almost all the manufacturers released their monthly sales volume. Except Eicher Motors and Escorts, all others posted a positive growth over a year ago. Here, Maruti Suzuki posted little subdued growth like 4.7% increase compared to a year ago, but TVS Motors increased about 25%. So, we can expect market to react for the whole sector. Second, nowadays not sure about the impact, but still it's an important info. Day before last night, Indian government reduced the windfall tax on petroleum product from 9,600 rupees per ton to 8,400 rupees per ton. Not massive, but still significant amount reduction. Third, another mild positive info. For the first time in the history for the April month, GST collection crossed over the 2 lakh crore rupees. Finally, about institution, it looks like now for the past 2 days this week, FII turned as positive, especially Tuesday, FII net bought for 1070 crore rupees, whereas DII also net bought for 1430 crore rupees. So together, institution-wise, the net bought for near 2500 crore rupees, which looks positive to me. Let's see. As a summary, US Fed chairman spoke dovishly, so the global momentum is good, but for some reason, US market closed negative and in line with that, GIFT Nifty indicating the gap down opening of 50 points. However, HDFC Bank ADR alone indicating the positive trade. Let's see. Then, as per stock open interest, HCL Tech, Birlasoft, Dr. Reddy's Lab, Coforge, Cipla, ICICI Bank and Kotak Bank got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, HDFC AMC, REC, Manappuram Finance, Exide Industries, Bank of Baroda and Petronet got an increase in open interest along with a positive close, indicating the long build-up. About the things to look out, today Coal India, Adani Enterprise, Adani Ports, Blue Star, Coforge and Federal Bank are some of the major Indian companies' earnings results are scheduled released today. Regarding macro, Chinese market will be on holiday. Then for Japan, their monetary policy meeting minutes release before our market opening is due. Then during our market hours, first at 10:30, India's manufacturing PMI data. Then at around 1:30 p.m., lots and lots of Europe related macro including whole Europe manufacturing PMI data and also individual countries one like for Germany and Spain, it's also scheduled to release. Then in the aftermarket hours for US, their weekly jobs insurance claims data, factory orders for March month and Fed balance sheet are some of the items we need to keep an eye out today. Coming to technical, last Tuesday, Nifty opened 30 points gap up and hit the fresh record high of 22,783, but the last hour profit booking made it to settle around 22,600. Thus, on the daily chart, Nifty formed a bearish candlestick pattern. Despite this last hour profit booking, still the overall trend remained positive and traded above all key moving averages by maintaining higher high, higher low formation. In addition, RSI also indicates a bullish crossover. Hence, over the next few days, the trend might remain sideways unless it breaks above the all-time high of 22,783. On the downside, immediate support is placed at 22,500, below which Nifty might decline further. In case of Bank Nifty, it opened 70 points gap up and also traded higher. However, went closer to 50,000 mark by hitting a new record high of 49,975. But later saw some profit booking and finally closed at around 49,400. Thus, on the daily chart, Bank Nifty formed small bodied bearish candlestick with long upper shadow, indicating selling pressure at higher level. So, to continue the positive momentum, Bank Nifty has to cross the 50,000 mark. Then, on the weekly options front, the maximum call option open interest was at 23,000 strike, followed by 22,800 and 22,900 strike, with maximum call option writing at 22,800, then 23,000 strike. Whereas on the put side, the maximum open interest was at 22,500 strike, followed by 22,000 and 22,400 strike, with maximum put option trading at 22,700, then 22,000 strike. Thus, from the options data, 22,800 is expected to be the key hurdle with support at 22,500 to 22,400 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.